It has been 2 weeks, and it has been 2 weeks too long. And a few things may have happened while I've been gone, but one thing hasn't changed, and that's my dividend portfolio gaining steam. And just because I need to take a break doesn't mean that my dividend paying companies need to take a break either in my portfolio. So in today's portfolio update, as per usual, every single month on this channel, because I actually show transparency, I was born with a set, unlike some other finance channels. While we're on the topic of channels, feel free to check out my new channel, We Are Naked Ryan BJJ. It's going to be a lot of stuff related to wrestling, lifting, and so much more content for me on there. And it's a bit of a passion project, so to go support. And let's get on to the video.
Hello, I like money.
Something that's really changed in my investing style recently is really just the consolidation of individual stock holdings. I've definitely come to the realization that not every company in my portfolio will outperform SPY. In my opinion, if I'm not buying it to outperform SPY, I shouldn't be buying it at all. And this is a sad realization for some of the companies in my portfolio that I may need to sell out of sometime if they get the right price. Cough target. But in all seriousness, for those of you who are new to the channel, these are the 5 basic bear characteristics that I look for in any of my holdings in the portfolio. First of all, free cash flow. We want to look for good, solid, quality, long-term free cash flow growth. Consistency as well. Obviously, one bad year, one bad quarter, not going to make me sell out of the company. And we, of course, like to look into why the free cash flow is declining as well. Some companies are doing capital expenditures, S&P Global, Starbucks, etc. We want to own companies that have logical shareholder returns. If the stock price sells down, we want to see companies buying back shares. We want companies that have cash, but also do the right thing with that cash as well. Number 3, we don't want to overpay for the stock or asset that we're buying. This is a huge thing that I've really come to realize, is that overpaying is one of the best ways to underperform the S&P 500. So we want to buy our companies undervalued or fair price long term. Now, if a company like Visa, perhaps, maybe it looks a little overvalued on paper, but it has really quality growth ahead of it. I plan to hold it for 20, 30, 40, 50 years, hopefully the rest of my life, fingers crossed. Then I'm willing to pay more of a premium. Companies like Costco, that would go the same for as well. Number 4, we want great qualitative measures in the kind of service that they offer, whether it be a restaurant, having a really clean, good store environment, whether it be a tech product, having an awesome, easy to use, convenient product. We want companies that have quality. We don't want to be buying garbage companies because garbage companies will trade at garbage prices. And number 5, we want great management. Now, this is something I want to pay a lot more attention to in some of the companies that I've been buying recently. I feel like management kind of flies over a lot of people's heads, including myself sometimes, and that's something I want to pay more attention to as an investor this year. On the topic of performance, I think this performance in this portfolio is going to be struggling for the short term. Right now, with holding some individual companies and also still holding on some companies that I'm at a deep loss at right now and are kind of sandbagging the portfolio that I eventually plan to sell out of, I'm going to be underperforming for a little bit here on the channel. So currently my portfolio over the last 1 year, obviously TD to Schwab transfer happened a year ago pretty much. I'm up only 10.1%, not including performance before that. Well, the S&P 500 since then is up 26.1%. So it's very disappointing to say the least, but I think it's important to keep in mind here with this is that the S&P 500 is being carried by some absolute giants right now like Nvidia, where one could say we're in a bubble. A big part of the total return and performance thing in my portfolio is the compounding and reinvesting dividends in these great businesses over a long period of time. And right now we haven't seen that effect yet, which I think will kick in. I'm looking to consolidate my portfolio to about 10 to 15 holdings right now. There are a few companies that I eventually plan to sell out of that are lagging in the portfolio right now. Companies like Realty Income, NextEra Energy, which I trimmed a little bit of this month, are going to be underperforming in a little bit right now because of the interest rates. And obviously, I think that's going to have an impact on the portfolio. But I'm not worried whatsoever right now. I think I'm buying a lot of great businesses, and I can confidently say with every company that I bought the last couple of months, they're companies I plan to hold forever. As for dividends this month, May is typically a decent month for dividends. This month, I received $34.91 in dividends, which is up from the last payment period of these businesses and companies of about $29. So good to see some growth there as my companies kind of just mature and I have less and less holdings that I'm selling in and out of. So the dividend income by month is going to be a little more consistent if you haven't already noticed already. But to start off the month, I got a whopping 71 cents from Costco. Good to see there. Obviously, I think Costco, one could make the argument is a buy no matter the price, but the valuation it's trading at is absolutely insane. I'd love to buy in a dip sometime, but I reinvested my Costco at that price. It's only 71 cents, so not the craziest dip in the water there. Then I got $4.35 from Realty, not reality income, which I reinvested back into the company. I'm continuing to do as so. As I've talked about in recent videos, interest rates are obviously impacting REITs right now, and I'm not going to be a complete pansy of an investor and sell out of a REIT when it's literally interest rates are historically looking really bad right now. I think that's the epitome of a fake man's investor. You buy a company, you buy a REIT, you plan to hold it long term, but as soon as the stock price starts trading down because of interest rates, quite clearly, you sell out of the company. And I think the only reasonable reason to sell out of the company's opportunity cost, and I don't see anything in my portfolio that's hit that level to sell out of realty income at like the 15-16% loss I'm at right now. So I'll happily be patient, be paid to wait, and reinvest my dividends. I will sell out of realty income once it recovers. It is definitely an interest rate recovery play. Then I received $10.84 from AbbVie. AbbVie's a pharma company. Pretty juicy dividend there. They're a company that offers solid dividend growth, free cash flow, and also offers some solid yield as well. And I think AbbVie's a really strong pharma company. I'm still working every day, every week to understand this company deeper. Out of all the companies in my portfolio, I feel that AbbVie is the one I understand the least, which is a reason I really haven't been aggressively adding to it on a dip. But if I get it back in the 130s range where I bought about a year ago, I'd happily buy some more. Then I received $2.65 from Apple, which I reinvested back. Now, there's a lot of negative sentiment towards Apple recently, which I absolutely think is wild. Apple's an awesome business. It's literally the definition of a company that you're going to buy and hold forever. A lot of people are saying that Apple's growth is going to slow down. It's going to underperform the S&P 500. Womp, 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 womp. Apple is the most innovative company on the planet today. They have amazing management, great leader in Tim Cook. Their innovation is absolutely insane, and they're also said to be a top leader in the AI boom. And while I'm personally not much of an AI guy myself, I would love to get some more exposure as I already do have Microsoft and Apple as some of my top holdings in the portfolio. Then I received a whopping 31 cents from Schwab, and lastly today I received a really nice $16.05 from the best company in the entire world, Starbucks, which I'm happy to reinvest at these lower prices. Starbucks is trading up recently, and one could say we've hit the bottom. And to be clear, I didn't say that. But $34.91 this month, a pretty solid month when it comes to dividends, and hopefully in August it will be even more. And this is an updated look at our dividend income since 2022, and I think you're going to see it be a lot more consistent as my core holdings get established. So for some obvious reasons, this is a pretty big month when it comes to buys, and it also came to a realization of something for me, that my cash supply was dwindling down. And I'm going to get to some of the positions that I sold, but also something that's huge for me this month, holding a solid cash position. It really is crazy how fast sentiment can change in companies, how big dips can really get, and how fast it can come. And when Starbucks dipped, I found myself a little stranded for cash at some point. At some point, I had like $600 left in the portfolio, and I was panicking a little bit that I wouldn't be able to fully opportunize off this dip. So at the beginning of the month, Starbucks had a crazy dip, right? I bought one share of it at $75.89, and I bought one more share of it at $73.82. Now, typically when a company falls after earnings, I like to wait a little bit to see where the company averages, but I also don't want to try and time, so I did dabble in a little bit there, and I got in at what looks like the low now, but obviously there's nothing that's guaranteed in the future. Starbucks can go to $65 next week. Who knows? This is a big one. It's going to probably come as a shock at a lot of you, but I also did sell to my only share of Berkshire Hathaway Class B. First ever company I ever bought, first ever stock, and a 92% gain. Now, here's my rationale why. Berkshire's a company where I got in at a really good price, but I also didn't see myself adding anytime soon. I will definitely be buying on another dip with Berkshire, but it has to be at the right price. I only owned one share, and it really was just kind of sitting there with all those gains, and I figured I'd take the gains out, buy back in at a decline. If Warren dies, I will definitely buy some, because there will be a crazy sell-off if that happens. With this, I'd also get about $400 in extra cash supply that I would let sit in my account, so I think it was worth it. Thank you to your service, Father, Son, Holy Spirit. Amen. First ever stock, and it's a little sentimental to see it go, but overall, I got really good gains on it. Then I put $85 into Starbucks, 50 of that at $73.11, 35 of that at $76.06. I put $15 more into Starbucks at $75, $25 more into Starbucks at $77. Then last week I sold one share of Nexair Energy at a 3% gain. So this started the trimming of the company. I got out of gains with it. I don't plan to hold it for the rest of my life. With utilities, it's just one of those things. I don't love it as an investor now. They carry a lot of debt as well. I'm sorry to my NEE bulls. I let you down. If it goes in the 80s and 90s, I would likely sell out of my entire position, but it's a very small position. I have a lot of like straws, kind of stranded positions that are kind of holding the portfolio back as well, and I want to clean it up. Then I put $50 into Visa at $274.15. $25 more in a Visa at $270.57, and then lastly $15 in a Starbucks at $78.39. So I put about $300 extra dollars into my Starbucks position and averaging down this month, which I'm happy to see. I also want to give a big thank you to Capital Mindset for joining the Starbucks cult, and we have a deal now, a new incentive. Whenever he buys Starbucks, I have to buy too, which is why I bought a lot this month. So, as long as that clause continues, I will be adding a lot more Starbucks probably. Those are my buys for the month. I'm being a lot more patient as an investor, being a lot more patient with my opportunities, and overall looking for some solid value plays. There are a few companies in my portfolio that are on declines that I'm continuing looking at too. Obviously, Visa below 270, I'm probably going to be adding more there. Disney at $90, I'd really like that. I want to thank you all for watching. Join the Starbucks cult today and do Dividend Stocks Not Drugs. Have a good one.